So let's start with the pitch. All right, there's House Hack and then there are mini funds. A lot of folks are confused about the difference between the two, and I totally understand why, because it's complicated. When we started House Hack in the summer of 2022, we fundraised with this pitch. We're gonna buy wedge deals. Trust me, bro. That was it. We had nothing. We didn't have the team we have now. We didn't have any properties. It was give me money and trust me, bro. And so what we've done since then is not only has the company doubled in value since then, but we've actually built out systems, procedures, plans. We've bought roughly $50 million of real estate, and we're operating that real estate. We're stabilizing that real estate. We've got a construction team. We've got an accounting team. We've got an in-house attorney. We've got an in-house software team. I mean, we have gone from basically zero to real functioning company in less than 2 years, which is really, really phenomenal. And House Hack is really an entity that we look at as how can we make real estate accessible to everyone, frankly, in the world? Because here's my fear. My fear is that real estate is going to become so inaccessible to folks in the long term that the wealth gap is going to widen even more. It's basically going to be impossible to buy a house for some folks. And so I have a real concern about people not being able to have reasonable access to diversifying into real estate. I think people should be able to join on the appreciation ride and not have to pay the crazy fees that exist in legacy real estate. Consider this. You want to defer taxes, go into a DST, I'll explain that later. You're going to probably pay 6% in fees just to get in. So, you're trying to defer shelter $1 million, let's say, from capital gains. You're going to pay $60,000 in fees just to get in, potentially. And then a 1% asset management fee, acquisition fees, disposition fees, waterfalls, 20 to 35% waterfalls on all your appreciation. You're going to pay these ridiculous level of fees just to get access to real estate. Pension funds, wealth advisors, CPAs, a lot of folks recommend diversifying to real estate, but the fees are so high. And so what we want to do is make it so people can get access to real estate with zero fees. So how do we do that? That's the question. The way we do that is we buy great deals. We get deals below market value that are distressed. That's where House Hack makes its money. So if I can buy, to make math simple, if I can buy a $60 million building for $50 million because the seller's loan was coming due, like at the top of our brochure, this is a property that we bought. You could get this brochure, a copy of this over at househack.com. Printed this up. It's pretty cool. You can get that over there. We won't go through all of this. It's available there for you. Househack.com. Click the investor tab. You'll see it. We do obviously have the fundraising deadline today for accredited investors. Read about that over there. That's your solicitation. Read your PPM. But so we bought this building, and it didn't actually need a lot of work. They just needed to sell. And so we believe we got a really big discount on this. That's just an example. We've done the same thing with single families that need a lot of work. And we have the potential of purchasing a deal right now that's worth about $19 million as a fixer going into foreclosure. And they go to foreclosure on May 6th. 6 evictions, 13 vacancies, needs to be renovated, garage doors, units. It's a disaster. This is the kind of product and service that we do at House Hack. We stabilize the real estate, we fix it up, we acquire it, we negotiate it, we scale the teams that can basically do the actual work, and we do all the accounting, the audit. We do all of that to get these properties from basically a crappy situation into a really good situation. Now that's not unusual. A lot of people do that. In fact, let's say you bought a place for $8 million that was worth 10. Great, you made $2 million. Congratulations. How do you get that $2 million out to do it again? Think about that for a moment. If you got a really good $8 million deal that was worth 10, determined by an independent board or an underwriter or an appraiser, right? How do you get the $2 million out? Well, you could sell it, but then you have to pay escrow fees, real estate agent commissions. You can't sell a single family house occupied with a tenant. You're going to get ripped off on the pricing, so that's not going to work. It'll take forever to find buyers for multifamily, especially larger deals in this environment. So your liquidity on multifamily is going to take a long time. The due diligence into the tenants, it's all a mess. It's really hard to get your money out. Now you might say, oh, but I could refinance. No, you can't. You can't get that. Well, first of all, I don't know that you want to refinance at 7%. We're operating on a 100% cash basis. HouseHack has zero debt, and we're going to keep it that way until rates are lower. But if you refinance, you're going to leave that extra 20% in the deal at the bare minimum. That'd be your down payment. So you can't get that extra out. So what we tried coming up with, and what we believe we have now come up with, is a strategy for realizing we buy 50 of real estate, say it's a $50 million purchase, and we can roll it for 60 to mini funds, determined again by an independent, either appraisal, underwriter, or otherwise. Now, HouseHack gets 10 million bucks. That's great. Obviously, we get the full 60 back, $10 million of profit. That's just one cycle. Obviously, that's gross profit. We have OPEX and taxes to worry about, but that's not important to touch on right now because we expect those to be a lot lower than obviously what the gross profit would be. So that's how, if our first cycle goes well, we think we'll be gross profitable, quite frankly, this year. So the goal is, how do we then do more of those cycles? If I can buy 50 of real estate and roll it for 60 instantaneously with a grant deed and an underwriter, well, I want to do those cycles as many times as possible. So my goal at HouseHack is to build not a $50 million real estate company or a $100 million real estate company or even a $200 million real estate company. It's to build a company that has its own software team. It's for property management software and an M1 Finance style setup of software. I'll explain that in a moment. And create as many of these profitable cycles as we can. And we'll start on the West Coast. We'll move to the East Coast. And basically what we're doing is we take 50 million bucks, buy $50 million of real estate, try to roll it for 60, take the 10 million in profit, gross profit. Do that over and over again. First cycle we think will take 18 months. Next cycle we think will take 12 months. Next cycle we think will take 6 months. Next cycle will take 3 months, we believe. Then we could actually run multiple cycles in parallel. So if, let's say, we do 4 cycles in California a year, we think we could do 4 cycles in Texas a year, 4 cycles in Florida a year, 4 cycles in Vegas. Each of those hopefully creating $10 million each cycle. And so that's where we think we can grow our EBIT, our earnings before interest and taxes, to tens of millions of dollars per year, hopefully hundreds of millions of dollars per year. And then IPO, hopefully, no guarantees, read the prospectus, there are risks with every investment. Hopefully IPO in somewhere between 2028 and 2030, barring being in a recession, and obviously assuming these projections work, we hope to IPO at a multiple on our EBIT. So if our EBIT is $100 million, we think we could IPO for $2 billion. If our EBIT is greater, we think we can IPO for more. And sometimes markets are crazy too. Like they could give you a way higher valuation. Look at Wingstop. They have an EBIT of just $70 million, and they're selling at over 140x multiple on that for $11 billion. I'm looking at Wingstop going, well, if they can have that kind of valuation, I'm confident I could turn this into a multi-billion-dollar company. But it's not just based on that. It's based on just normal math too, like normal 20 multipliers. And also the cash flow process we have. So now, that's HouseHack, okay? That's venture capital, 2028, 2030 is the exit goal. Goal is, how do we create massive cash flow without debt? In order to do that, we're going to build our own property management software, and you'll see why in just a moment. And we're going to build what we call sort of an M1 Finance style version of investing in real estate. So picture this for a moment. I'll pull up an M1 Finance chart. Imagine you could invest in an M1 Finance pie that let you allocate $500 a month, let's say, to the exact custom pie you wanted of real estate. So we go to their website, you have a pie, and each of these slices, let's say it's real estate in California, real estate in Texas, Florida, and let's say all of those are single families, multifamilies, and then over here you have the short-term rental fund or the warehouse fund. Basically, you could take $500 and allocate whatever percentage you want to each of those. The goal is that non-accredited investors can invest in those little pies, those slices, and they can do that with no fees. That's the goal. No asset management, acquisition, disposition, waterfall. The people who invest in those pies get 100% of the appreciation, no fees, and the rental income distributed to them quarterly. So it's a dividend, right? You get a dividend. This is what we want to create. We have a software team that is going to make this. Now, there are a lot of complexities around this. I am making a broker-dealer. That's why I got all of my licenses at the end of the last year, to help make this happen, to facilitate this happening. You know, sometimes people look at me, they're like, Kevin, how are you doing YouTube and House Hack and you got all these FINRA licenses? You know, I joke that like, somebody's like, oh, you get the Series 7 license. It's like a series of 7 licenses. You know, it's because I've got the 7, the 14, the 24, the 27, 63, 65, SIE. It's a lot. But we're doing that because in order to make our app, we need to associate with a broker-dealer. And then we can, to non-accredited investors, advertise these pies. And it's not just the public, but we want our tenants to invest as well. So now tenants can actually own a slice of their own real estate for no fee. Now that's pretty cool, because if you can own a slice of the house that you're renting for no fee, you might take care of the property better, you might be happy that you're diversifying into real estate, and you might want to keep renting from House Hack Properties. If somebody moves from California to Texas because they're sick of Gavin Newsom, we want them to say, hey, got any House Hack homes over in Texas? We want to rent from you because you're a great landlord. We love the quality of renovations that y'all do, and we want to invest in the property that we're renting for no fee and get dividends in doing so. That's what we're trying to create. So House Hack is the creator of the property management software, that M1 Finance style Pi software, the buying the distressed assets, the stabilizing of the assets. That is the multi-billion-dollar vision that we're creating at House Hack. Obviously, there's risk to everything. One of the risks is the demand that we might get for mini funds. We believe there is a lot of demand for mini funds, but we could be wrong. One of the most popular types of mini funds, which is basically one of those slices of pie, which would be a self-contained entity. Mind you, each of these mini funds, they should be self-contained. They pay for their own property taxes, insurance, maintenance, management, utilities, reserves. They're their own operating entities that can grow up and have their own valuation, so they can IPO as their own little babies in the future with the real estate that they have. We benefit at House Hack by rolling real estate that's stabilized over to them and collecting that cash, that difference in value. And the mini funds collect the cash flow and the appreciation, all with no fees. So the demand that we're seeing, where there's a lot of demand for mini funds right now, is in something known as a Delaware statutory trust. Now, I know some people hear Delaware and they're like, bro, do it in Texas. Elon told us Delaware sucked. DSTs, as far as I'm aware, only exist in Delaware right now. We just listen to outside counsel. Real estate investment trusts get incorporated in Wyoming. Delaware statutory trusts in Delaware. So yeah, I know that comes up, but we just listen to outside counsel on that for now, and I'm not opposed to using other states if those options exist. But what I want you to think of right now is, let's say you have $10 million after you've sold your real estate. You've got $10 million of equity that you had in real estate. You sold that real estate because you're sick of tenants and toilets, right? So let's say you got $10 million of equity here, tenants and toilets. So we're going to put that over here. So you got the headache, you got the pain in the ass. All right. How do you go from this to not paying taxes, still having real estate exposure, and not dealing with tenants and toilets? Watch this. If I can create and list a public REIT, like one of these mini funds, if I could take one of the mini funds and list them on the New York Stock Exchange, shout out to the NYSE, love the team over there. Shout out also to the NASDAQ, could be NASDAQ as well. If I could list over there, then I can have a public mini fund that is a REIT over here, and that's going to pay quarterly distributions. So we'll just call it dividends. You'd get a 1099 dividend over here, and then you'd have liquidity, right? You'd be able to swipe up and just sell your share of that real estate. So this over here is no, we'll just say tenants and toilets. There we go, no TNT, right? If you just sell your real estate and buy a REIT, you're only going to be able to put over here, maybe $7 million, because you're going to lose $3 million to the tax man. And that kind of sucks. You don't want to pay $3 million in taxes. That might be $2 million, that could be up to $4 million, just depends on your tax situation, obviously, right? That is a crappy situation. Now you have less money in that REIT, so people stick with tenants and toilets. Well, guess what we found out how to do? We found out that we can actually, you can sell your real estate with capital gains in it. You can move that into a Delaware statutory trust, and that is done through a 1031 exchange. So you own a slice of real estate that me, Kevin, bought and stabilized with the team that we've scaled and taught how to do this. You 1031 into the DST, and ready for this? Then you, after about 2 years, 721 into the REIT, and you've literally now gone from $10 million at tenants and toilets to $10 million, no tenants and toilets, and no fees on a slice of real estate. That's just one example of how we can actually get people out of having to deal with tenants and toilets, but getting maximum tax efficiency and a yield. I mean, consider this. If you got a 5% yield on money markets, you're like, I'm going to sell my real estate and move into money markets, but you're giving away 30% to the government. Well, then really what you have is not a 5% yield anymore. What you actually have is a 3.5% yield because you just lost 1.5% to the government. So that's just one example of how we can get a demand for mini funds. And people who are interested in that are already emailing us at ir@househack.com. Soon we're going to have our prospectus ready. Within about the next few weeks, we'll have our prospectus ready for our first mini fund, and it'll be a DST. After that, we'll have our M1 Finance style Pi app for non-accredited investors. And then hopefully we also have a public version, so somebody could just swipe up on Robinhood and buy a slice of real estate. Now that real estate, we believe, will be sold or rolled, we call it, at fair market value. Yes, it is selling. But the reason I don't like using the word sell is because it implies lag and commissions and fees. But we don't have that problem. We think we can go from the real estate that we own, that's cash owned, through a simple grant deed, which is one signature with the notary, move it over into a mini fund and avoid all of the friction of selling real estate. That's why we call it roll. Yes, in practice, it is a sale. In practice, when we have gross profit at HouseHack, we are going to pay taxes on that. Obviously, we'll do whatever we can to be as tax efficient as possible over at HouseHack and the mini funds. The mini funds will do all the work for you in terms of cost segregation, accelerated depreciation, straight line depreciation, whatever. All of that cash flow goes to mini fund investors. That's for the individual properties, right? They collect their rent, pay their bills. What's left? That goes to the proportionate ownership in those mini funds. Now, myself and other execs at HouseHack will be on the boards of these companies. We'll have a majority independent board, right? That's where other outsiders are involved to help with valuation and potentially even independent underwriters. If we do non-public, so private basically, mini funds for non-accredited investors, we'll actually be required by law to have an independent investment bank with 5 years of underwriting experience put their name, their banking license on those valuations. So we're not worried about those independent valuations because we think we're getting good deals. So that's how mini funds work. Mini fund investors, again, you get the dividends, you get all the tax benefits, the depreciation, you get the, hopefully the appreciation and the growth in value of those mini funds. HouseHack simply goes from buying something at a distressed price to a higher price. That's what we capture, and we try to do that in cycles over and over and over again. Now, in the future, is there a potential that we could, license our property management software to other folks or mini funds? Absolutely. And that could be another source of revenue. Look at a company like Buildium. They had about 17,000 units under management at Buildium. They don't manage, right? They're just software. And they had nearly $1 billion valuation just for the software. And so we think we've got two huge software components to HouseHack. You've got the property management suite and the M1 Finance of real estate, or the Robinhood of real estate, right? Zero fee commission. This is huge. These are game changers in finance. It's taken me 2 years to get to this point where I'm able to say I could not be more excited about this, because I think we're creating a potentially tens of billions of dollar company. Now, people look at me and they're like, but Kevin, you got YouTube and HouseHack. How do you balance that? Okay, I get it. The licenses help HouseHack, but what about YouTube and HouseHack? One of the things you have to remember is companies that do real estate funds that have massively high fees, one of the reasons they have high fees is because they have to advertise. Well, guess what we get to do for free with YouTube? Advertise. It doesn't cost HouseHack a dime for me to be talking about HouseHack at the end of a JPOW meeting to 18,300 people watching this right now. It costs us zero. YouTube is a feature. It's not a distraction or a bug. It's a feature of how we can grow HouseHack. And so are the licenses. So all of a sudden when you look, it's like this is a laser sharp focus on the future of house hack, which makes sense. Because somebody's like, well, what about the plane, Kevin? Why would you, be reckless and spend $13 million on a plane? That seems risky. It's very risky. And I pay for that risk. I signed that risk. It's my debt. I pay the expenses for that plane. The 22 cities we're going to is going to cost house hack like $10,000 in hotels and, dinner for the guys and the team, some printing fees, $5,000 for brochures or design or whatever. Probably going to cost house hack 10 grand. I'm going to spend probably more than twice that on new tires, just having gotten everybody around to these 22 different cities. Let's not even talk about gas. Now, so some people look at that and go, why would you do that? Why would you buy a $13 million plane and spend $2.5 million a year operating that plane? Well, it's because I think we are building a tens of billions of dollar company. And so to me, the plane, which might cost me $20 million over a 5-year period, I think that plane is a call option on the success of house hack. And I've paid every single dime of that plane. So to me, when people ask, hey, what's your stake in house hack? Like, how do we know you're serious? That's how. It makes zero sense to own a plane for any reason other than house hack. Sure, is it nice to occasionally be able to go, I'm gonna go fly skiing and do a day trip and come back? Totally. But that enables me to be the CEO that can build teams, meet realtors, negotiate deals, meet sellers in person, and still be back to have time with my family and my 7 kids. That's another thing that comes up. People are like, who helps with all the kids? Right now, we have as many nannies as we have children. And we're about to outnumber children with nannies. We're about to go to 8. So let's just say we've got a lot of help. And baby Summer is home. In fact, really happy. I get to after this live stream, I'm gonna take this wristband off. This is Summer's wristband from the hospital. And I only got to hold her for about 3 or 4 minutes today because I've been live for most of the day. But and then she's been asleep during another part. But after this, I'll be really excited to feed her and hang out with her as well as all the other children. So really happy about that. Of course, she came home at kind of an inconvenient time. They were telling us that she'd come home in the middle of May, and I'm like, all right, let's do the 8-day roadshow and end it, at the end of April. Well, now May 1st. Sure enough, they call us at the beginning of the roadshow. Come pick Summer up. So, that's just the way life is. But anyway, the point of this, and sort of the takeaway, the simple high-level takeaway is, house hack, think venture capital, think M1 Finance of real estate, the Robinhood of real estate, think property management software, think building systems and teams. We go West Coast to East Coast, scale it slowly, scale it sustainably. And we try to do as much as we can in terms of working with folks to make sure we get good deals and we can stabilize those deals. Then mini funds. Mini funds, think stable real estate, fair market value real estate, that whatever that goes up in value, the investors in that get 100% of that. You get the dividends, the quarterly dividends, and all of these will be self-sustaining little entities. They'll be these little babies to where in the future, let's say we do 20 mini funds, over here on like an M1 Pi, you have 20 different choices to choose from. We start with class A and B real estate, single family, multifamily, and then we go up the risk curve. As we're established in an area, we've got teams in our area, we can do short-term rental funds, warehouse funds, build-to-rent funds, development funds, whatever. We could literally have a fund for every kind of real estate that exists. As we grow those little mini funds, they can all individually IPO out of this app and basically be publicly traded. So go from private to public. That would be a big moment for each of those little pies we would expect, or each of those little funds. And we do that all with no fees, which is great. So they're self-sustaining entities. House hack isn't layering on fees. Obviously, they're going to have operating costs. Like I said, if you have 100 units, well, actually, I don't know if I said this yet. If you have 100 units, like let's say right here, this fun pie, let's say that represents 100 properties. Obviously, you're going to need at least one property manager. So what we do is we hire a payrolled property manager to keep that reputation up for our house hack properties in that individual fund. So that's a W-2 payroll expense for that mini fund, but that's okay. It's self-sustained. Any real estate you buy is going to have property taxes, insurance, maintenance, management, utilities, reserves. Duh. The difference is at the top level, so like let's say, on top of this app, so to speak, there's no 1% acquisition, disposition, asset management, 20% waterfall, 35% waterfall, DST fee of 6%. All of that BS, we set to 0. Now, why do we do that? Are we trying to burn Wall Street and burn institutional investors? No. We actually want to create white label products for them. Think about that for a moment. Let's say JP Morgan today has to charge a 1% fee to do a real estate fund because they're paying somebody else 80 bips or whatever, and they're picking that 20 basis point spread. After a couple of years, we think institutions might come to us and say, yo, Kevin, can we make a $500 million mini fund? You buy the distressed real estate. We'll pay you fair market value with $500 million for it. Can you make us a JP Morgan mini fund? And we'll put our own fees on top of it. So now what you have is JP Morgan taking our 0 fee mini fund. They could add their own fee to it. And now what? They could potentially collect 50 bips, which is a cheaper deal for their clients than the previous, 100 basis points they were paying, but they're collecting 50 as opposed to 20. So you could get a higher spread and a better product for investment banks, wealth advisors, CPAs, realtors, for basically anybody on Wall Street, pension funds, school endowments, doesn't matter. We're creating a product that we think will become so popular in the long term that we think we're at the start of a revolution where you're going from high fee exposure, like high fee, high cost to get into real estate, to commission-free trading, basically, like what the Robinhoods or the stock brokerages of today have done for real estate, for stocks. So that's a really big deal. So that's HouseHack. That's what HouseHack is doing. Those are what mini funds are. HouseHack, venture capital investment. Right now, you have to be an accredited investor. So you can invest by going to househack.com/2024. If you don't have your accredited investor letter yet from InvestReady, your CPA, your attorney, that's okay. Just sign the subscription agreement today after you've read the PPM. I'm sure the SEC is listening. Okay, there are risks with every investment. Please read the risk factors. Ask us questions. We're going to have this open for questions right now. IR@househack.com is another option. Obviously, I'm going to answer a lot of questions right now as well. But once you decide, or if you decide I want to invest, and you're an accredited investor, if you're a new accredited investor, the minimum's $40K. If you're an existing accredited investor and you want to add a little bit, you could email us if you want to do, a little bit less, like somebody wanted to do $35K or whatever. Just sign your subscription agreement, email us, we'll take care of you. And then, of course, you want to make sure that you wire in soon. I'll give you some reasonable time to wire in. And get your letter in for either your W-2s, your tax returns, your InvestReady letter, your letter from your CPA or attorney verifying that you're accredited. Or if you're a Series 65, I think that works too. There's some licenses that work as well to verify that you're accredited. You could Google, am I an accredited investor, and figure that out. So this video, as a disclaimer, is not a solicitation. We're going to go to Q&A now. The prospectus is. That's what sells an investment. So read the private placement memorandum, also known as an offering memorandum or prospectus, whatever. Read that, househack.com/2024. Make sure you sign before the end of the day today. We can clean everything else up. That's easy. We can clean up your letter, wiring funds, we can clean all that up. But you got to get that signature in today with how many shares you want and reserve your spot. My goal is to never fundraise again for HouseHack. Now, no guarantees, but my goal is to never fundraise again for HouseHack. Because if our mini fund liquidity works the way we expect it will, with the DSTs and the mini funds or whatever, we don't think there'll ever be a need to raise money again for HouseHack because we operate on a cash basis, and we think the cash flow is going to be really, really good because we found a way to take wedge deals and turn them into cash at no cost. I mean, obviously, there are operating expenses and stuff, but on a gross profit basis. So that's really exciting to us. And of course, there'll be like valuation expenses and stuff, but that's not a big deal. So that's the difference. HouseHack again. Big bottom line. HouseHack, venture capital. Goal is IPO 2028 to 2030. We want to get $2 a share to be worth 20, 40, 60, 80, $100 a share, whatever we can get to. Duh. That's my goal. My reputation is on the line for that. I put everything on HouseHack. So that's the goal. Venture capital. IPO 2028, 2030. Goals. Obviously there is. Mini funds. In the future, you'll be able to invest in those. Not right now. But in the future, you'll be able to 1031 exchange into them like a DST. You'll be able to buy a slice of a mini fund. And you'll get an offering at that time. That offering will be very simple. It'll kind of be like, hey, do you want a 5% yield or a 4% yield? all the appreciation, no fees, and this is the type of real estate you get. If you look at it and you're like, I don't like that type of real estate, don't buy it. You look at it and go, I think the real estate market's going to crash. Don't buy it. You think real estate market's going to go up. Maybe buy it, right? So that decision will be able to be made when we have the various different mini fund offerings. And again, we expect to have our first mini fund offering, the Delaware Statutory Trust, open for investors within the next 30 days. You can actually already identify, if you wanted to identify a 1031, just email us at ir@househack.com to verify that, what the name is. But I believe it's Househack Homes DST1, the number 1. Verify that with us in an email before you actually identify, but that is coming. So sort of testing the waters with that, and wait for the memorandum before you actually complete any kind of investment, because obviously we can't complete an investment in mini funds until they are ready to accept capital, which they're not yet. So that's the progress. That is Househack, mini funds in a nutshell, and I understand it's a complicated nutshell. There's a lot that I just talked about. I cannot wait I cannot wait to not pitch all of that for Househack again and only pitch mini funds. And that's why we're ending the fundraise today. Because this is complicated. This was a lot of information that I just gave on what we're doing. You know, some people say, Kevin, you're so transparent about what y'all are doing, and it's subject to audit and all these independent valuations and FINRA and the SEC. Like, can't somebody just copy you? Sure. Good luck. Real estate is hard, and you need to know a lot about real estate. And so I think our moat is in the software we're building, the way we're building it, the quality of renovation work we do, the way we can scale real estate, the fact that you've got a CEO who pays for his own plane that can get around and actually scale this business, and this hasn't been done before. I don't think Wall Street is really interested in shooting themselves in the foot and killing high fees right now or anytime soon. So it'll take some time. Obviously, there's risk, but we think what we're doing is very moated because real estate is hard. It's a pain in the ass. Let's just be frank. I love it. So there we go. Thank you so much for listening to this pitch. What we're going to do now is we're going to open this up to Q&A. So whatever Q&A that you have, feel free to ask away. Thank you, King AC. That's nice of you to say. Let's keep this to Househack questions. Let's go ahead and get into it. Let's see. Okay, so somebody says, on my share cert, it says shares are worth 0.001. No, that's not how share certs work. When a company is first created, what you do is you create, you authorize that's called par value. You authorize 1 million shares at $100 or something like that, right? That's not the value of the shares. That's the par value, the initial, you formed the document. The value of the shares is $2 per share. So that's a par value question that you have. What I encourage you to do is chat GPT the difference between par value and share value. Also understand that you can, you can Google this. You could also look up the par value for other companies and you'll see the same thing. So that's very different. If 1031 into a mini fund, wouldn't I still be taxed as soon as I sell? Yes. If you sell out of the mini fund, you'd get a tax. So let's look at that again. Let me explain that. So I'll show you exactly where the tax would be. Oopsies. Sorry. That's an earnings call I was going through. How did I just pull that off? There we go. Sorry about that. Okay. So to answer your question, where do you get taxed? Do you get taxed when you sell your real estate? No. If you 1031, this is called a 1031 tax deferred exchange. No tax here. Do you get taxed when you move into the DST? No. Do you get taxed when you 721 to the REIT? No. Do you get taxed on your dividend distributions? Yes. Qualified, non-qualified, and return of capital. There are 3 forms of taxation that go into a dividend for a REIT, if we use the REIT structure. Now, if you sell shares of the REIT because you're like, all right, I'm done with tenants and toilets, now I have the shares of the REITs, now I feel like selling. Will you pay tax at that point? Yes. Obviously, because now you've deferred taxes until the sale. But what most people do is they keep the shares forever, and then what they do is, when unfortunately they get hit by a bus or, the Grim Reaper comes one day, what you do is you get a stepped up tax basis, obviously estate tax limits, talk to your CPA, I'm not a CPA, And those estate tax, or those capital gains could disappear through a stepped up tax basis. So let's say you had $10 million in real estate that was fully depreciated. So if you sold it, you had to pay gains on $10 million. You get hit by a bus and you're no longer with us. And then and your children basically would get a stepped up tax basis. And if they sold those shares the very next day, they would pay $0 in taxes, thanks to the stepped up tax basis. Obviously, laws and stuff could change, but the stepped up tax basis has existed for ever, as far as I can remember. But it's a very good question. Ahmed, email us at househack.com. What happens to Househack without Kevin? Great question. First of all, we got life insurance in as little as 5 minutes with Househack as a beneficiary. So, of course, any startup is going to have what's called key man risk at the beginning of the startup. But the good news is we operate on a cash basis, and we're actually buying real assets and building real products and real teams. So the goal is to turn Househack into really a company that can operate as sustainably as possible without me. Now, obviously, as we move through the frontier, that is, we open up new locations, I'm there, I'm in everything. But right now, if we open escrow on a deal that, somebody's like, look, Kevin, we underwrote it, it's a great deal, we negotiated, I go, sounds good, team's done a great job, they've been training them for over 2 years now, and we got a lot of great people, a team of 15. What you'll find is you need to be on the frontier, but not to buy it, to do the escrow, to do the acquisition, the renovation, to deal with the tenants, deal with the problems. That's all a trained system that already exists. That gets done without me. And the point of that is, as people are trained well, we can scale. I work on the fringe. I work on sort of I like to call it like holding the shield, and I'm pushing the company forward. So obviously, yes, there's risk, but the goal is that I can train people to also pick up a shield, push the company forward in the future. But yeah, absolutely true. That is a risk. Thank you for your time and commitment to Househack. It was great meeting you in Orlando. Thank you so much for being here. I'm between Financial Guide Investment. They do PWI supporting you. Can you explain the difference between explain? I'd really have to look into some of these other potential investments or opportunities you're talking about to really compare. A comparison I like to use is look at like Fundrise. They spend like $20 to $30 million on marketing a year, and the fees that these companies have are insane. Or you look at even like, what's the other one? What's it called? It's like Aurora. There was, what's that Jeff Bezos real estate backed startup? It's called, what was it called? Oh, I don't remember what it's called. But I went through their, Arrived Homes. I went through their prospectus for the individual investments, and I'm like, holy crap, these are more fees than I've ever seen in my life. These are like money-losing companies that are blowing money on advertising. Oh, Jeff Bezos this. What does Jeff Bezos know about real estate? People are like, who are you talking to for like insight into Househack and advice? Imagine this. Professionals in real estate investing, in building real estate funds, real estate attorneys, real estate CPAs, real estate tax attorneys. Those are the people I talk to, people with real estate experience. So good question. But yeah, you really, when you compare different options, you just have to compare the fees. That's really important. Go into the prospectus, press fee, Command F fee, and understand some of the difference there. Okay, why is this not registered with the SEC and operates under an exception? Because it's an accredited investor round. So the way an accredited investor round works is you could do a general solicitation to investors who are accredited, who can do their own due diligence. Now, we did a non-accredited round that was registered with the SEC under Regulation A in September and October of last year, which allows non-accredited investors to invest. We're not doing that kind of round right now, so we're operating under the Reg D exemption. So is there a timeline on accepting my holdings within Pulley? Pulley is our transfer agent. You get an email, accept your share certs. I don't think so. But obviously, whenever you accept your share certs, you get your copy of your share certs. What is the accredited investor equivalent in the UK? International investors might actually have an easier time doing this, because what I would just do is, if you're international and you want to invest and you think you're accredited, you've kind of Googled and you're like, that sounds about right, I should qualify for that. What I would do is I would consider signing the subscription agreement today, then call your CPA and your attorney, or do that even today. But if you're in the UK, you're not doing that today anymore. Call your CPA and your attorney and go, hey, could you do me a favor? Can I pay you to write me a letter to say that as an international investor, I would qualify under the accredited investor guidelines if I was in the United States, but I'm international. That's good enough for us. So that would be the way to do that. Can Househack roll over the ownership to mini funds with a premium or multiple to market value since all the hard work and done? Yeah, I mean, not a premium to market value, probably not. We want, because we want people to buy the mini funds and expect that they're getting something at a fair value. You know, we're not trying to like get a premium on that. We want those mini funds to build their own premium, because the better mini funds do, the better it is for Househack. So it's win-win. We do a good job for them, Househack wins. And mini fund investors win. And tenants win. You know, we got to have a quality asset. We got to have quality products. And real estate is hard. But we could do that very well. So they could grow their own premium in the future, though. Like, let's say a mini fund raises money at $1 a share, you know, 1-to-1 book value. The mini fund itself, if it were to IPO on the public market, it would probably, I shouldn't say probably, I should be careful with the wording. There's a chance it could go up in value to $2 a share, like an Invitation Homes or an American Homes for Rent or whatever, on its own without any appreciation, just because they're their own operating companies. Then you add appreciation and cash flow and dividend options. So we think we're really creating an amazing product that's win-win. And done very transparently. That's the goal. So compensation for me, I'm not compensated. We don't have any stock plans at this moment. We don't have any salary. Here's the thing. For me, I don't have a salary. I don't really care about Househack being a $50 or $100 million company. In fact, well, $50 million in assets, $100 million company. Right now, growing that to 200 or 300, that doesn't excite me. What excites me is seeing this sort of like small plant blossom into a beautiful, like, rose garden, basically. That's my dream. And so in the future, I want to do so well over time for Househack investors that Househack investors are like, please, buy yourself a new plane so you could, have a bigger peepee or whatever. That's my goal, because my reputation rides on Househack, and so we've got to do an amazing job. And so, trying to take a few bucks here or there, it's not for me. There's so many expenses that, sometimes we'll be at a restaurant and like, this one's on, Meet Kevin, even though we're doing Househack things, like whatever. Like I don't care about $100 here or salary here or whatever. We got to get to multiple billions of dollars, and we can worry about that kind of stuff later. So let's see here. Househack. So I'm like 10 minutes behind on questions here. Househack has the money and will buy distressed real estate, fix up, roll over to mini funds. But where is the mini fund getting money from? New investors. Those are different investors, right? So somebody who wants to invest, and those might be Househack investors too. Like a lot of folks are telling me, I want to invest in Househack and mini funds because they want a 1031 in, right? But that's new money. So what you're really doing is you've got mini fund investors who say, hey, I want a dividend. I want to own a slice of that real estate. I'm willing to pay fair market value for real estate. Cool. So really what Househack did is we flipped it to the mini fund. The mini fund investor gets their proportionate ownership. So let's say we have a $100 million mini fund. Somebody comes in and says, Kevin, here's $10 million on the mini fund. They own 10%. So they get 10% of all the appreciation. They get 10% of all the cash flows, 10% of the depreciation benefits via that dividend, right? So a different type of dividend. They are a 10% owner of that company. So that is a totally different investment than investing in Househack. So good question. All right, let's see here. Let's see, non-accredited investors, now that there is much more of a plan, what are you going to do with the money? Are you asking me what we do with the money we raise? Well, we deploy it into real estate, right? And we do the cycles. Do course members get any perks? No, the current perk is if you invest more than $100,000, you get warrants. Now, this is actually cool. So if you invest $100K, you get warrants to buy at the same prices we're raising for today, and we won't call those warrants until 2026. Now, we might not ever call the warrants, but the goal is, we called the first warrants, so we expect to call them again because, we want people to feel like they're winning by investing in Meet Kevin, right? So, in Househack. So when you think about the warrants, if you invest $100K, you're able to potentially, if you want, invest again in 2026 or beyond at the same valuation as today. So it really gives you a free 18-month-ish call option, which is kind of cool. Let's see here. You can't use your warrants anymore. Unfortunately, the warrants expired. Can you pay $40K with a credit card? I don't know that we have an on-ramp for that right now, but I would recommend wiring. I think the fees on credit cards would be too high for that. They'd kill your cash back. Yes, correct, Gus. If you bought $7,500 on the first unaccredited round, you'd have 75. Yes, that is correct. You'd have 7,500 shares. You've spoken about the risk with mini funds. Would love to know more about this tonight at San Diego. What's the expected time frame to ramp the new funds? Do you see any regulatory delays? Yeah, of course. There would be any never-ending forms of delays. The expected time frame for the first DST, which would probably be an accredited round for the DST, is about 30 days out. And we hope to have our non-accredited rounds ready in the third quarter. But yes, that could get delayed. That's a very good question. What happens after you invest as a non-accredited investor? Well, in HouseHack, you hold your shares. I mean, they're non-restricted. Theoretically, you could sell them, but you have to find your own buyer for them. Yeah, but really, you hold until IPO is the thesis, but that's up to you, not personalized financial advice. For the mini funds, non-accredited investors, you get dividends, right? And then you get appreciation, the value of that mini fund growing up. Who will pay the OpEx of the mini fund properties? So I think we answered that already, but the mini funds themselves, right? The operating expenses are all built into there. You know, they pay their own property taxes, insurance, maintenance, management, utilities, the CPA to do the audit, the other CPA to do the, whatever, right? All that is just part of a normal expense. Let's see here. Oh, okay, yeah. So low renovation. Okay, the best wedge. This is a good question. The best wedge ever is to buy a deal that needs no work, right? The best case scenario is I go buy a $60 million building for $50 million and I have to do no work to it. That is the best wedge deal that could ever exist. You want to do those all day long. Most deals are going to require work, and it just depends on the negotiation. A good question. Issuing mini funds sounds cyclical. Is cash flow lumpy? Yeah, potentially, but that's why we're operating on a cash basis, right? So yeah, I mean, we think first mini fund cycle is 18 months, end in January 2025. Next one ends in January 26. Next one ends the middle of 26. And then we get to quarterly, right? And then you could have multiple cycles going on at the same time. In fact, you could quite frankly have, in theory, a cycle closing every single day. Just because you could just always be doing mini funds in perpetuity. You could have a mini fund closing every single day, theoretically. DSTs will have at least 3 a year as an example. So there'll be a lot of cycles. HouseHack doesn't actually take much market risk if the mini fund cycle progresses like this, because we're only holding properties for 90 to 180 days. So, and the most that the real estate market ever fell was about 1.9% per month in 2009. So, call it 5.6 to whatever, or 5.7 to 6%. That's nominal compared to the discount we're trying to get anyway. What kind of yields are you expecting for mini fund investors? Good question. So, Class A, B real estate's probably 4% plus appreciation. Obviously, right now we'll compete with like money markets, but it's a diversifier, and it's Class A, B real estate and a mini fund that could grow in value by it being its own company, but also grow in value through appreciation. So you have to factor that in. And then obviously the tax benefits if you come in through a DST. In the long term, we think we'll get into higher cap real estate. Like, I took the guys to a 10 cap, and this 10 cap, we roll up to the 10 cap, and we rolled up with the disclosures. We're like, oh, okay, all of the $300,000 heating system, the whole thing, free of leaks is what the disclosure is. Great system, whatever. Then you've got a disclosure that's like, all the fire extinguishers, they just need a small servicing, but they're in operating condition, right? So we roll up. First thing is McKay picks up a shell casing. He's like, is this a 9 mil? So that's the start of that, going up the risk curve here on a 10 cap. We look at the HVAC system, it's leaking like a sieve. We look at the fire extinguishers, they're rotted out. If you picked them up, you'd have half a fire extinguisher in your hand. I start talking to the property manager. I'm like, hey, so what's your screening criteria out here? I mean, it's 10 cap, this is great. What's your screening like? And he looks at me like, credit. Like, do you run credit? Like, oh, okay. Yeah, we run credit. But it's only to check if the tenants are a felon. And if they're a felon, we have a second chance program and we could rent to them anyway. Down the road, in the future, maybe we'll get into the higher cap stuff. Short-term rentals could probably do a 7 cap on a mini fund. You know, riskier assets will have probably more price volatility, and a 10 cap could have a lot more vacancy factor that's hard to price in correctly up front, and it's a pain in the butt. It takes a lot more work. So we're going to start Class AB real estate, move West Coast to East Coast, and then we'll get into some of the more risky products. But one could stay in one more DSTs and not convert to the REIT. Yes, that is true. But that is a Venus flytrap, my friend. See, when you go from real estate to a DST, you usually pay that 6% fee. Then you go to another DST, you pay the 6% fee again. And another DST, and you pay it again. Sure, you could 1031 back to real estate. But the whole point of going into the DST was not to be exposed to real estate. So we believe the best thing is to DST to a REIT so you don't have to keep paying these DST fees, and you have liquidity should you want it. Keep in mind, you could also borrow against shares through a broker, through a margin loan. And not that I encourage people to use margin, but the point is, let's say you had $1 million in a REIT that you 1031'd into, and you wanted to take a margin loan against that of $100K. You could do that and not pay taxes. See what I mean? Like, these mini funds create so many delicious opportunities for investors. These mini funds, I think, are going to be such a great opportunity. Obviously, there's a lot of work between now and then, and those are separate prospectuses, but I could not be more excited about them. The big question is just how fast can we get those cycles going, right? All right, good questions. Let's see here. How will we know that JPM does not get the best properties in their mini funds versus public? That's such a down the road problem, right? I get what you're saying. It's like, oh, they get the better property. I'm not really worried about that. I think all of the real estate that we buy will basically be the equivalent quality product, and the disclosures will be made very clearly about where the real estate is and the class of real estate that it is. I don't foresee that being an issue. Quite frankly, I foresee too much institutional demand potentially being an issue where it's like we have too much money. That could be a problem in the future. Again, very good problem to have. Okay. Oh yeah, somebody else is like, oh, you should do crypto real world assets. I'm like, maybe. Somebody else is like, Kevin, you need to list mini funds on the Hong Kong Stock Exchange so Chinese investors can invest or whatever. Okay. And there are endless options, right? We could list mini funds in the German stock exchange. Somebody else came to me and they're like, Kevin, you need office in Dubai. Like, okay, like we're not opposed to anything, sort of growing and getting folks on ramps into the mini funds. Awesome Jasm, I would say this is where like we've had a few people reach out to us. They're like, hey, look, we're selling a certain asset or whatever. Can we sign the subscription agreement today? And then when that money comes in, can we fund it at that point? I'm not opposed to that. Just email us, what your situation is. I'm sure we can figure that out. Is the appreciation the investors receive on the real estate earmarked to the basis Househack buys oh good lord, Househack buys or at the basis Househack rolls the mini fund? Okay. Yeah. I understand. So if we buy real estate at Househack for $50 million and we roll it to the mini fund at 60, the basis for the mini fund is 60. And so then the real estate would have to, if it was a double, it would have to go to $120 million worth of real estate, right? Good question. It took me a moment to read that one. When will Househack accept Bitcoin? I mean, yeah, in the future, I think crypto on-ramps would be cool, but not now. Let's see here. Will Househack allow small landlords or owners to sell their equity to Househack for a slice of rental income? Househack would manage the property. That's a partnership? No. I don't partner in real estate. Sorry. Let's see here. What's my ownership percentage? Whatever, 1 mil is divided by whatever we raise. So, but also keep in mind, I have voting control. So the shares I own are voting shares. And as an early startup, that's extremely necessary I mean, look at, you know, the problems that some other companies are having right now that are even more mature. But when we IPO, that ownership will go down substantially. Like the voting control will become democratized over time. Let's see here. Somebody says arrived fees are industry standard. I disagree. I think they're higher. But let's say they are industry standard. Thank you for proving the point that the fees are very high because the industry standard is very high. Is there a fee? Yes, then it's more than house hack. So you admit there is a fee. How does the house hack ETF factor into property appreciation? Can the ETF refinance properties in the future? Okay, so the mini fund. Yes, mini funds can refinance in the future when there would be positive operating leverage. That would then create potentially more opportunity to grow the fund, buy more real estate from house hack, or return capital to investors. So yes, a mini fund could refinance in the future and return capital to investors. Yes. ETF is a different topic. Could we in the future IPO multiple mini funds and put them all into a bundled ETF? Of course, but that's down the road. All right, so boy, I'm 17 minutes behind on questions. Sorry, folks, I'm going here. The 1031 into DST, does it automatically transfer the REIT after 2 years? Could I decide to 1031 to another DST? I haven't figured that out yet, but that'll be in the prospectus. It will probably be at the board's discretion of that DST. So if for some reason we can't complete the 721, then you would have the opportunity to 1031 out. Again, I don't know why you would want to do that because then you're going to pay a lot of fees again, but TBD. Kevin, how will we know that you... Oh, okay, I answered that question. What's the goal to get the mini fund app out? Minimum viable product, end of the year. That's the goal. Let's see here. Okay, I got in the Reg A round. Nice. Can house hack roll over the... Okay, I answered that. Some of these I've already answered, so I'm going to scroll ahead. Let's see here. Kevin, no, there's no management fee. There's no performance fee. There's none of that. No. What about having a financial qualification as an international investor? That might work. Email us at ir@househack.com. Fill out the subscription agreement, and then we can see if we could use that. Thank you for the answer, Kevin. You got it. How will the shares get distributed once the mini fund IPO? Well, I mean, like if you buy in a mini fund, if let's say there are 1,000 shares of a mini fund and you buy 100 of them, you get a share cert. If it's public, it would be through your broker like Robinhood or TD Ameritrade or whatever. If it's private, then it'd be through a transfer agent like Pulley or something. I just arrived here. U.S. economy. Let's see. Spoken about the risks of money funds. Yeah, okay, we'll talk about that. Yeah, we answered that. Fundrise secures $770 million credit facility from JPM. It's not hard to do. Congratulations, Fundrise. You are paying probably 6.25% to JP Morgan. Good job. We think we can beat Fundrise's butt very easily. That's my opinion. Let's see here. I never uploaded my JPOW vid. I was going to do that. Okay. Let's see here. Yes, assets would need to be assigned to the DST. For example, if the interest is 10 to 15 mil, subtract from the 60 needed to list on the REIT. Yes. So you would take a proportional share, you would list that on the New York Stock Exchange, and for the DSTs, you take a proportional share, and then that proportional share, we would just use that cash to go buy more properties to fill up the bucket again. Appreciation that investors receive earmarked to the basis that house hack buys real estate. Okay, we answered that. Sorry, I gotta stop reading the duplicate questions. I'm at 1:16 for questions right now. 1 minute or 1:16 p.m. Biggest risk for house hack, in my opinion, is that we don't do mini funds quickly enough, or there's not enough demand for the mini funds. That would be the problem. I don't think that'll be a problem. I think that would just delay the time frame, right? If it takes us 6 more months to sell out a mini fund, for example, oh well. House hack will set up the mini funds and incur some costs. Yeah, exactly. Yes, house hack would incur some costs. Yes. But again, we think the cash flow is going to be so much higher than the OpEx. Big house hack fan. Only thing I'm concerned about is the consistent multifamily demand or mini fund demand at IPO. Yes, that is exactly the risk. As far as big institutional money interest, I think that comes after probably a 2-year track record. Crypto down the road. Mini funds independent for house hack. Exactly. Okay, you're talking to somebody else. Can I invest in house hack using my IRA? Yes, you actually can. You'd have to use a self-directed IRA, so you'd need to find a custodian, something like directed IRA. So you could do that. And that's going to take you a few weeks to like set up and get done. What I would do is probably make sure you sign your sub agreement. And then after you do that, we can sort of work through some of the details of how to make sure that it gets taken care of. But yeah, that'll take a little bit of time. But yes, you can. You're able to raise money for house hack and mini funds through infinitely. I don't want to raise money for house hack. I don't want to raise money for house hack at all anymore. I want to be done with this. This is a very complicated explanation, right? Like, think about it. How hard? My pitch was like 30 freaking minutes for understanding house hack and mini funds. It's hard. Like, you have to really pay attention to understand it, and even then, sometimes it's so blurry. Mini fund pitch would be easy, because with a mini fund pitch, all you do is you say, do you want, say, a 5% yield or a 4% yield with all the appreciation? Here are the tax benefits. Here are the locations of the real estate. And you get 100% of the appreciation without fees. Do you want that? Yes or no? That's a mini fund pitch. Think about how easy that is. That is such an easy pitch. Compare that to what we've had to do with house hack. My goodness, it's a lot harder. Now, as far as like diluting in the REITs or like mini funds, usually when a mini fund raises more capital, they're adding real estate. So sure, theoretically, is there dilution in the like if you take $100 million company or $100 million mini fund, let's call it. You take a $100 million mini fund, you own 1% and $1 million, and then it buys $200 million more of assets. Yeah, now you own 0.5%, or it grows to $200 million. And it raised money for that extra 100 mil. Yes, now technically you own 0.5%, but you own 0.5% of $200 million. So you still own $1 million. But the fund grows, and then potentially the fund attracts a higher valuation. That little mini fund could get bought out in the future by a Blackstone or whatever at a premium, and then you would get that, proportionate slice of premium. So that's a good question, but it's all very normal in like real estate investment trusts for you to theoretically, yes, you have dilution, but again, you're growing the pie. So I think that's less of a concern there. And again, I don't want to raise money anymore for house hack. I want to be done with it. This is a long explanation. I've literally done these conversations 20 times, and I've got 2 more to go. San Diego, Long Beach, then I'm done. Then I'm taking a break. Could you imagine that, me taking a break? Oh, man. Good Lord. Okay, I think a CPA is a financial advisor. No. CPA is a certified public accountant. A financial advisor is like someone with a Series 65 license. If I have like if you have somebody's like, if I have 10,000 shares of house hack now, will I still have 10,000 shares when I IPO? Yeah, unless you lose them, which they're on our cap table, so that's not really possible. You could sell them, but yeah, you hold your 10K shares, you still have your 10K shares. Who is paying out? Okay, we explained that with the mini funds. In my opinion, house hack is pretty simple. It's basically buying real estate the same way Kevin has taught on YouTube for the past 7 years, just at scale. And mini funds allow to basically recycle the funds. That's a pretty good example, or a pretty good explanation. That's pretty good. Give me 1 second here. I need to put this title in here. Summary. Wow. Market tanks after Jerome Powell goes dovish. Full explanation. There we go. Let's post that. There we go. Full fed explanation. I just have to hit post on that really quick. Did it. Okay. Yeah, I forgot I had that video exported already because we did the summary video. I just forgot to upload it and actually post the darn thing. But now I did. Okay, so now we can keep going with the Q&A. See, look at that. Okay, next. I hate Zillow. It's not a surprise that their volumes are going down. I'm a tax guy working at TTD in Ventura. Previously worked at a CPA firm in real estate for many years. Wanting to know if you want an in-house CPA. We're probably going to be hiring more in October. Like we've got 2 right now in-house CPAs and 1 person who's sort of our in-house accountant, but not licensed as a CPA. We're totally down to grow and expand, but probably that'll be like Q4. And that's awesome, man. On Trade Desk, Ventura. We'll see you at Ventiki. Say there's a 20% real estate downturn. What does HouseHack do? Well, HouseHack expects to buy during that time. We want to keep buying good deals, right? Remember, the goal, like a 20% downturn would probably take 2 years to play out, or maybe even longer. Just sort of depends how quickly that happens. We operate on a cash basis, so we want to keep buying real estate and sort of DCA in any market, and then we roll that to the mini funds. So even in a recession, there are going to be people that are like, hey, I want to buy the dip on real estate. Cool. Mini fund is a way you could do that. Kevin, okay, I've answered that question. You've asked that question quite a lot. I'm still 17 minutes behind. When can non-accredited investors get their shares? You should have already gotten an email with your shares from Pulley. So look up PULLY in your email. If you invest in a mini fund, how do you get the gains of the property value if they're never sold? Well, we could refinance and return capital to investors, and at some point they'll be sold because they'll be fully depreciated. Let's see here. Good question. Remember, again, deadline to invest is tonight at midnight. All you have to do is go to househack.com/2024, read the PPM, sign your DocuSign. If you don't have your Invest Ready letter yet, if you don't have your attorney letter, CPA letter, accreditation letter, whatever, your funding, whatever, if you don't have that yet, we can fix that after the deadline. That's okay. Obviously, it'd be nice if you wired your money today and you signed your subscription agreement today and you had your accredited invest letter ready. But I realize that's not realistic for people who wanted to listen to this Q&A to get all of that done. I respect that. I understand that. And so therefore, we're going to make sure you have time to get in. Ramon, yeah. So we've been out of the office for the last 7 days on the roadshow. Email us at ir@househack.com. We're going to do our best to get back to you as fast as possible. Recognize we have one more roadshow to do tonight, and we will solve helping you. But we're, if we get 1,000 emails, it is going to take a minute. So we will get back to you. If you don't hear after a couple days, just resend your email, but you should. There should be no reason you don't. Unless it's obviously honestly, we're probably going to be working through Saturday and Sunday, and I'll be in there too. I'll make sure you guys get your replies. Does HouseHack get ongoing income from mini funds? The only thing potentially that I would see now would be licensing software. Maybe in the future we could, for some funds, there could be like a share of appreciation or whatever. That's all down the road. We don't need that. Somebody here wrote, Zillow dropped 10% after hearing about HouseHack. Yes, has nothing to do with earnings, I'm sure, but that's funny. I like that. Only complaint, you drank the punch bowl of democratizing XXX. Yeah, I know. I know it's a little corny to say, but you have to say, it is democratizing real estate. So, non-accredited are not currently able to invest in HouseHack. That is correct. It's because partnering with a broker-dealer is very complicated. It's one of the reasons I'm making a broker-dealer, to solve those complexities. Yeah, if you didn't get your email from Pulley, just email us at ir@househack.com. You're on the cap table, don't worry. So the full board is in the PPM. You could read that. Why do you risk everything when you have 7 kids and private jets to take care of? Well, because that's who I am. I want to grow just as much as I want to grow children. I want to grow businesses. I would lose my mind if all I did was, I hate to say it, but it's transparent, just hang out with kids all day long. I would go nuts. I love my children, but I cannot be with them all day long. Just like I love Lauren, but we cannot be together all day long. Well, actually, we're pretty good. We've been together for what, since 2008. Maybe that's not true. We could probably be together all day long. But there's only so much you could do together all day long. Are there any foreseeable hurdles imposed by the SEC? Sure. Yeah, mini funds have to be approved if they're not accredited by the SEC. I shouldn't say the word approved. They don't like the word approved. They have to be qualified. So that would be a Regulation A offering, of course. Absolutely, there could be regulatory delays, but we can solve that. So, Kevin, these mini funds, bundle of properties, the individual mini funds manage their own properties. Okay, I'm at 134, so I'm only 10 minutes behind on questions now, mostly because a lot of these are becoming similar. Directed IRA equity trust can do self-directed IRA management, can recommend the latter, as fees went up a lot over time. Yeah, there are some fees if you do it through an IRA, not our fees. It's, them doing that. HouseHack buys wedge deals and sells stabilized rental properties in mini funds. Correct. What assets are left with HouseHack? Process, systems and procedures, HouseHack. Right. Well, it's either cash or real estate or both, right? So you take 50 of real estate. Cool. We got the assets, the team, the systems, and everything. If we turn that into 60 of cash, now HouseHack owns cash and no real estate for a moment. Then we go buy more real estate. Simple. Let's see. Let's see here. I don't know how to transfer out of an IRA to a different IRA. Sorry. Kevin, is there a reason why you're waiting until 2030 to take HouseHack public? Well, it's all going to come down to the mini funds. If the mini funds go really, really well and people are like, Kevin, that mini fund sounds great. The DST sounds great. I want a slice of that real estate. Fantastic. That goes really well. We could accelerate the time frame. That's why we think between 28 to 2030. But I also need time to do the cycles so we can actually prove to Wall Street what we're doing. And that takes time. We're not like a SPAC, we're like we got to build real cash flow. I don't like money losing businesses. I like cash flow. And that's what we're creating. Do you anticipate having to transform HouseHack? Okay, let's be clear. HouseHack is a corporation. HouseHack is a Wyoming corporation. The mini funds will probably be corporations that are taxed as a REIT. So clarify that. Probably also Wyoming. But again, if Texas is better, then we'll do Texas at that time. Okay, we answered that. What is the expected investment? I mean, I don't know. I want it to be as much as possible. Like, if I could 100x the shares for HouseHack, of course I would love to do that. I can't guarantee that. If I had a crystal ball, I could tell you what the future said. But look, let's put it this way. I'm not spending $20 million on a private plane with operating expenses on the plane to not try to make this a multi-billion-dollar company. I'm not, like, I look at the plane and I'm like, I need to start using this again, because, like, we got to put it to work. Like, I'm paying for an expensive tool. So sometimes, I'm going to have, like, a week off of flying, obviously, now, because we had an insane amount of flight. But, then I get the itch again. I'm like, all right, I'm paying a lot of money for this thing to sit around. I need to fly again. Get back to work. So if you were to invest in HouseHack in the first round of fundraising, what would the warrants be? Well, the warrants have expired. So we gave a lot of notice. We were really good about that. Those expired, I think, like April 8th or something. Do we expect to expand the legal team graduating next year? Yes. Yeah, totally. Like, we would love a legal, to grow the legal team. Contract reviews, tenants, whatever. There's always going to be bull crap with real estate. Duh. So, yes, absolutely. Hit us up when you're ready next year. Just hop back on to say, yeah, sorry, Farmer Rhett. Okay, I'm almost 4 minutes away from new questions. Kevin could have easily forgot about the little guy and not done a non-accredited round, but he made sure to include everybody. That is true. And it was a pain in the butt, but we did it. So we did do that. That was September, October. We did the non-accredited. It's a pain in the butt, not because of the investors. It was a pain in the butt because of having to deal with, a third-party broker-dealer. Again, that's why I want to make my own broker-dealer, so I don't have to deal with a third-party broker-dealer. No, HouseHack has no plans on reincorporating in Delaware. Let's see here. Yep, a man without meaning is a lost man. Oh, Kevin is the opposite of lost. He grinds. Oh yeah, lots of grinding. That could be misconstrued, but in a funny way. Let's see here. Yeah, sure. HouseHack could in-house all of the property management, but the problem with that is then the mini funds can't grow their own sort of business valuation because they're reliant on an outside management. I mean, they still theoretically could, but I'll leave that as an option. Right now, that's not the plan, but I'm not going to say no to it in the future. Yeah, we could. This is a good question, and it's a fair question. What happens if legislation is passed where corporations can't own single families? Fine. Then I'll just buy multifamily or warehouses or short-term rentals, whatever. There will not be a shortage of opportunities for house hack. I'm very confident of that. In fact, it's a lot easier to do multifamily. I mean, if I could go to Chicago and buy a $60 million building for $50 million in one swoop, well, that's a lot easier than doing 100 singles. But usually the market, transitions in time. So Q3, Q4 is usually a really good time to buy singles. Multifamily can be really any time in the year because it depends on when people's loans are coming due. Okay, we answered that. Mini funds pay a dividend, yes. So somebody's like, I want the plane. Yeah, I love the plane. Is House Hack interested in data center? Sure. There could be a data center mini fund that we make, right? Whether you build a data center in the future, that's all down the road. At what point can small investors invest in House Hack or mini funds? 5% chance we do another fundraise for non-accredited for House Hack, so that's probably off the table. But mini funds, hoping for Q3. Yep, that's the goal. So if I start a business at my home condo and yeah, you could take a talk to a CPA. That's obviously an unrelated question, but yeah, talk to a CPA. You could probably do that. Design your own building. You could do that too. Absolutely. That's all down the road. We don't really want to get into construction right now in terms of like new builds unless we're using Biden bucks. So if we had Biden bucks, then then we'll do a new dev. There are Biden bucks available to buy like offices and turn them into multifamily. Of course we could do that. Kevin's like a calmer Ben Malla. What are you trying to say? I love Ben. Are House Hack employees unionized? No. We treat our employees really, really well. How many houses per year do you expect to be buying in a year's time? All depends on the mini funds. And it also depends on a single family versus multifamily. It could be hundreds or zero. And it just depends on where the better deals are. Can you have access to mini funds in Canada? Probably. Yeah, international investors should be able to invest in mini funds. Again, those, we're talking about mini funds in this video. Disclaimer. We're talking about mini funds in this video so that people can understand investing in House Hack. This video is neither a solicitation for House Hack nor the mini funds. However, there is a solicitation available for House Hack at househack.com/2024. The mini funds are only being talked about in the scope of what we're trying to build with House Hack. We're not raising money for the mini funds at this point. When do you get your House Hack vests? I know. I really want to find a way to scale manufacturing those House Hack vests. If somebody has a way to scale these sort of vests and brand them, email us at ir@househack.com. That'd be cool. And then we can sort of sell them or give them out to some larger investor or whatever. Actually, no, we're not allowed to do that. The perks have to be the same for everybody. Blue Ocean Business. What would you qualify as or consider your biggest competitor? Money market funds? I don't think anybody's doing what we're doing. Would it be equally as much work to allow non-accredited investors who have already invested in House Hack? Yeah. Still need a broker-dealer. Massive pain in the butt. And it would cost us a lot of money. And we're not available. We can't do it right now because we don't. Just can't. At minimum, it would be 90 days before we could do that, a non-accredited round. And it's I don't know if it's worth it for House Hack because we want to close this accredited fund. I want to be done raising money for House Hack. I just want to be done. And the reason I want to be done is because it's complicated. Mini funds, simple, easy pitch. I could pitch a mini fund in 5 minutes. I could be on the JPOW live stream. Honestly, I don't even need 5 minutes. I need 30 seconds. I could be covering Tucker Carlson, Vladimir Putin, going, hey, by the way, do you want exposure to real estate in this city? And do you want this yield with no fees and 100% of the appreciation? Consider investing in XYZ. Read the offering memorandum over here or download the app and consider investing. That's the mini fund pitch. As you can see, The house hack pitch is a little more involved. Now, we've answered that on the mini fund management. No worries on the double question. If I had 100K shares, what would be a fair value for them? They would be worth 200,000 right now. So what do you think Kevin 3 years ago would say to sell your real estate and buy a DST REIT tax-free? Well, first of all, one of the biggest reasons I hate selling real estate is the taxes. Now, it is true. I'm not the biggest fan of selling real estate. However, I have even said, 3, 4, 7 years ago, once you're fully depreciated or you're tired of dealing with tenants and toilets, 1031 out of it. So, for a person today starting, go buy your own real estate. I'm a big fan of you owning your own real estate, or do both. Do it all. You could do house hack, you could do committee funds, you could buy your own real estate. I will never discourage people buying and holding their own real estate. But am I going to, do I think Kevin 3 years ago would think that 1031ing out of your real estate is something you don't have to deal with, and you don't have to deal with the tenants and toilets is a bad idea? No. So, you already did it once for non-accredited. Why not use the same broker? Don't want to get into that right now, but I don't want to use the same broker. B, so that's A. B, we still need to be qualified by the SEC, which even if I could magically file today, would at minimum still take probably 45 days to get qualified from the SEC. Are mini funds for accredited investors only? No, mini funds would probably be for everybody. That's the goal, is that they're non-accredited for everyone, with the exception of maybe the DSTs. But the odds are if somebody's 1031ing into a DST, you're probably an accredited investor anyway. Can you 1031 into house hack? No. Okay, I'm now caught up with questions. So if you've got any questions, I can answer them instantaneously now, basically. Any plans to offer mini funds directly to retail, similar to fundraisers? Yes, absolutely. We want to create an app that's like M1 Finance, where we can offer the mini funds directly. Yep, and just advertise that on YouTube. Is there a conflict between you selling a course teaching people how to find wedge deals for themselves? Doesn't that technically train competition for house hack? Yep, that's one of the disclosures in the PPM. Am I really worried about a lack of deals, though? No. I've never found a lack of deals. Never been in that situation. Kevin, I joined 2 years ago. Yeah, if you have that problem, email us at staff@meetkevin.com. Will mini funds be available at all brokers? If we go public with a mini fund, it should be available at all brokers. Yeah, that way you could just swipe up on Robinhood, Interactive Brokers, TD Ameritrade, whatever. When we'll use cost segregation. The mini funds will cost segregate to accelerate depreciation, and so the investors in the mini funds would benefit from that accelerated depreciation. Are there? I'm not sure what you mean. Or are mini funds the product? Mini funds are the product of house hack. Yeah. Any concern with the demand for mini funds? Of course. Yeah, absolutely. Absolutely. But the good news is we think for DSTs, there's really, really high demand. But we have no idea what the demand is going to be if we take a mini fund public or we do the sort of M1 Finance style app. We think it should be really good because the fees are zero. But we have no way of knowing that right now. And we don't have, the apps built yet. Those are just things that we're working on. What does failure for success look like for house hack in 5 years? I think failure looks like we're a $100 million company now. We just stay a $100 million company, or we grow it slowly, right? So we refinance, we buy some real estate. It goes, we turn into a $150 million company over time. Like for me, that's a failure because I want this to be a multi-billion-dollar company. That's what a failure would look like. Success would be like, holy crap, mini funds are doing so well. House hack is a $50 billion company, and we're going to IPO, and we're buying a Gulfstream G700 for every one of the first employees, and we're growing the company even bigger. Those are like $80 million, mind you. That's like insane success. That sounds wasteful. I'm joking about that, but that's my point. That's what like house hack would look like. Massive success would look like. So good question. Can you comment more about ownership? Yeah. Well, the big thing is that you have to look at house hack as not just a monetary investment for me with the risk that I'm taking with the plane. Remember, I have to allocate like $20 million to this plane over a 5-year time frame. That's $10 million in operating costs, $10 million just in the ownership of the plane and potential depreciation loss, the opportunity cost. So really, I look at my investment in HouseHack as like 20 million bucks. Then it's obviously the time, the effort, the stress, the building the systems, the building the IP and the know-how and the training. It's a lot. The time it takes to make even these videos, to do fundraising, the bull crap you have to deal with attorneys or tenants or whatever. That's my investment, right? In addition to obviously the 7 figures of shares. Let's say HouseHack IPOs, would trading options be available? I mean, this is like so far down the road, but yeah, usually after 60 days, shares can apply to have options turned on, basically. What is your plan for reducing the cost of taking mini funds public? I can't make my own investment bank. So, the only thing you could really do is say, hey, we're going to bring you a lot of business. Can you reduce some of the fees? Because we got a lot of things to go public, right? That's all down the road. Journeyman electrician, in the future. I think we'll be hiring again in October. Minimum investment for this round, $40K, unless you've already invested or close or whatever. Just email us, ir@househack.com. Will your original platform app be free to download and use? That's the plan for the mini fund app. Yep, free to use, free to invest in. Think of it like an M1 Finance. So, good questions. Okay. On the whole, would it be better for folks owning HouseHack or the mini funds long term? I mean, I look at HouseHack as basically like a mini fund with the potential to grow, right? Because we have the real estate. And so like the worst case scenario to me is it just stays like a mini fund. The HouseHack potential side, I think there's risk, but I see it as like, can we 100x it? That's the goal. That's the dream. That's the vision. Mini funds are, you own a slice of real estate, you diversify into real estate, you hope the real estate goes up in value over time. Does it go up 50%, 10%, whatever it is? Could go down in value. But you're owning a slice of real estate. So it's a very different kind of real estate investment. There, with mini funds, you're investing in dividends, cash flow. We do the cost segs for you. You've got some more liquidity probably in mini funds. HouseHack, you don't have a lot of liquidity until we go public. So they're very different. A lot of people looking at it going, well, I'll do both. But, what a lot of people do doesn't necessarily mean that's what you should do. Remember, risk with every investment. Read the prospectus. househack.com/2024. What's your favorite rental property rule to calculate ROI? It depends. You can't use a single rule because every state is different. If I go to Texas, I have to use a 50% expense ratio. If I'm in California, I use a 35% expense ratio. Property taxes are so different. HouseHack makes money between the delta of the price HouseHack acquires the property for and what mini funds underwrite it at. Correct, but it's also what we acquire it for and spend renovating it or stabilizing it. But yes, in principle, what you said is exactly right. That's the delta we make money on. But then it's also creating that M1 Finance style app, that system, and creating the systems to do that over and over and over and over and over again. Shout out to M1 Finance, by the way. I really like them as a company. Obviously, they're in stocks, different world. So how well does the market represent real estate appreciation? Well, I mean, you have to look at like a Simon Property Group, I think. That's a risky style investment because you're investing in, high quality malls like Westfields and stuff, I think. But look at Simon Property Group. It was selling for less than book value during COVID. Duh, everything shut down. Now it's trading for 9 times book value. So I have no idea what the market's going to decide. So can Canadians invest? Yes. Can you comment on property management as the company scales? And where do you continue to find company management? Yeah, I mean, that's hiring. It's training. I like hiring people and training them. So, I mean, that's just a human capital issue and scaling. We are overstaffed with 15 people now for, $100 million company. I can manage the real estate we have with way fewer people. But we're building the company out and training people so that way we're ready for a multi-billion-dollar company, right? Okay. I just had to check when my flight is. Because we're going to San Diego and Long Beach today. You can meet me in person. I'm going to ask if you've watched this video, because then I don't have to spend as much time doing the pitch. I'm exhausted. What would it take for you to create your own investment bank? See, that doesn't really work. because I think it's in the 5,000s, but there's a FINRA rule 5,300 like 36 or something like that. FINRA rule 50. I'll just go 5,300. That would be conflict, broker dealer, investment bank disclosure. FINRA rule. I'm not gonna be able to find it right now. It's in the 5,300 range. But anyway, if the FINRA rule requires that if you do a non-accredited round with a company that has a conflict of interest to the mini fund, so to speak, you need, and the broker dealer, then you must disclose the conflict and have an independent investment bank. So there's a problem there. Now we could use a third-party broker dealer and remove some of that conflict. So that's a potential, but then somebody still has to value the real estate. So anything's on the table, but we're trying to do everything we can to reduce costs. Again, why I got all the licenses. But creating my own investment bank, that's like not in the near-term horizon of intentions. Good question, though. Yes, if properties are bought with loans, mini funds pay for the loans. Yes, mini funds buy from HouseHack, exactly. Chat GPT the law. I can tell. I'll tell you what the rule is. I'll pull it up really quick. So let's see. Right now, nobody would lead it the way Kevin would exactly. That's my thought. So it's in the WSPs. Let me go to February. Is it here? WSP. And then open WSP. That. Open. There we go. Okay, so this would be investment bank. Let's see. Doing this live is a little tricky. Oh my gosh, I didn't think investment bank was mentioned 93 times in this. Okay, anyway, it's one of those rules. It'll come up. I'll see if I can find it. I'm pretty sure it's in the 5,300 range. But anyway, I can't find it right now, especially not live. But yeah, I thought if I just searched investment bank, I'd find it right away. Never mind. Did I feel an earthquake? I felt nothing. Thank you for your answer. If somebody can do it, you can do it. Thank you for that. That's smart. HouseHack cashless purchase. Yeah, exactly. Exactly, Manuel. Exactly. Manuel, sorry. I'm thinking about FINRA Manual, and I just blended that with your name. My bad. Anyway, that's it. I'm exhausted. Will HouseHack be worth more than Apple and Saudi Aramco combined? Strap question. That makes it seem like you're Elon. Is that good or bad? That depends. All right, folks, look. If you have questions at this point, email us at ir@househack.com. If you would like to invest and you don't have your accredited investor ready, invest ready letter yet, your CPA letter or whatever, you could still sign your subscription agreement today. Best case scenario, you sign your subscription agreement today, you wire your funds today, please do not ACH, and you obviously have read the PPM and the risk disclosures and otherwise. You've done all of that. And so you sign your subscription agreement, read the PPM, and you wire your funds today, and you have your accredited investor letter. That's the best case scenario. It's 2 p.m. already. It's already past the wire time frame. So that's impossible at this point, unless you've already wired. So what's the next best thing? You sign your subscription agreement before midnight tonight. So you go to househack.com/2024. We'll do it right now. househack.com/2024. This is where you get lots of answers. This is where you could join me on the roadshow in San Diego or Long Beach today. This is how you could get your accredited investor letter. This is where you could download the investor presentation. This is where you could download the PPM. See, look, here's the investor presentation. Yay, pretty. Here's the PPM. Ooh, not pretty. This is very important though. This is the solicitation. The video is not. The brochure is not. This is. Okay, then you can click invest now. This right here, that's not supposed to be pressure language, mind you. SEC, no, there's no pressure. You must not do this. This is your choice. But then you could fill out this information. If you don't have your letter yet, just upload like some blank document as a place filler. But then you can go through the DocuSign. We'll fix it all after. We'll help you get it fixed in email. Give us some time, obviously. But yes, the round closes today at 11:59 p.m. Pacific time, so make sure you, at the very least, complete that DocuSign before then. If there are issues, we will fix it afterwards. All right. That was very good. We finished JPAL like an hour and 40 minutes ago. So that's been a lot. Will HouseHack shares be worth more than Wings? I hope so. I'm so tired of that company. If coming into a DST from cash or IRA, switching to another DST would cause... Yes. Yes. If you went from like our DST to a different DST, yes. Obviously, you're going to pay whatever their fee is, right? I own profitable single-family rentals. Let's see here. In the U.S., is holding property more advantageous if corps continue to eat up the segment of the market? Well, I mean, the more demand there is for real estate, the more you're probably going to see prices move up, especially in areas like California, where you have, you know, in California, you've got a political environment that is very anti-building homes, but they want affordable housing, which seems like cognitive dissonance. Like, how does that make sense, right? I don't, what do I know? But, yeah. Good question. So, everyone, thank you. SEC is always in the room, as they should be. You know, I don't disrespect the SEC. I actually think Elon sometimes is too disrespectful to the SEC. I know they make mistakes. You know, obviously, I think they've made mistakes with crypto, but I actually don't mind FINRA and the SEC. I think if you do the right thing, you have nothing to fear. That's not always true, obviously. You know, obviously with some of the stuff you've seen with crypto, but you know, I'm glad that they're going in the direction of now, you know, like approving the Bitcoin ETFs and growing from there. So there you go. So thank you. Thank you all so much. I should press this button. Even though I'm a licensed financial advisor, real estate broker, and becoming a stockbroker, this video is neither personalized financial advice nor real estate advice for you. It is not tax, legal, or otherwise personalized advice tailored to you. This video provides generalized perspective, information, and commentary. Any third-party content I show should not be deemed endorsed by me. This video is not and shall never be deemed reasonably sufficient information for the purpose of evaluating a security or investment decision. Any links or promoted products are either paid affiliations or products or services which we may benefit from. I personally operate and actively manage ETF and hold long positions in various securities, potentially including those mentioned in this video. However, I have no relationship to any issuers other than HouseHack, nor am I presently acting as a market maker. That's funny. The market tanked into the close. Look at that. All of the trading bets went in. Market closed. That's actually funny. I got to send out that alert, but I actually set some buys in the fund for it's called market on close, and when you buy in a fund, you could set the purchase moment could be whatever the market price is at the close of the day. And so I put some market on close orders in, and that's really funny because that means as long as those went through, I was live during that time, but as long as those went through, the pricing of that would have been right at the close, which is funny because it means yeah, that was the lower point. All right. Anyway, thanks so much for being here. See you in the next one. Goodbye. Good luck.